Hey guys, this is a market update, a very important video as we break through the 30,000 level for the first time during this cycle, or the new phase of the new cycle that we're going into, just trading underneath that now. Where do we go from here? What is the macro saying? And where are we in the Bitcoin cycle as well? I want to look at that in this video, and I'll leave timestamps below. If you saw my previous market update videos, I said 30K is that key short-term level to breach, and we have breached it now. This for me is very bullish price action. Now, this comes off the back of news yesterday that Hong Kong are going to be supporting directly from the government investment into Web3. Very, very good for the entire crypto sector, in my opinion, despite what's happening in the States. I think that all gets worked out in due course. Whether it requires an election cycle or whatever, it doesn't really matter. But this is an industry that is going to be very big, and you're now having one of the world's superpowers investing in it. 30K was the low for the previous bull market. It was the major support level once, twice, and then the third time, and we eventually broke through it. We've now reclaimed that. What I want to see now from a TA perspective is, what is the actual price level that we're going to find support at right here? Because we've broken through 30. We're now trading just underneath it, which is actually quite normal price action. What we want to see is go down to the shorter time frames or lower time frames and really just see where is the actual support level here, because you can see we're grinding up into this resistance. We usually get a God candle through the resistance. Now we want to see where the profit takers are actually going to force us. I would love to see 3, 4, 5, 6 touches on 29.8, 29.9, somewhere around there, to prove that we're actually going to hold this level or not. So apart from that, this is bullish price. How can this is just a huge uptrend now that we're in, a massive difference. We have come out of that bear market cycle, and I'll show you the on-chain to prove it later in this video. If you are a trader though, get a deposit bonus on Bybit, link in description, deposit and get up to 4,000 deposit bonus. Check the details via that link. Before looking at on-chain data, we'll look at the macro because it's a big turning point as well, and Bitcoin is trying to price this in. So tomorrow, as of making this video, we have the latest inflation figures. So April 12th, the inflation figures for March are coming out. Now, I don't know if this is going to have a lot of the data from after the bank crisis. I think it's important to realize that the data we're seeing is just not going to be pricing in what is happening in the economy right now. And so looking at backwards facing data is going to give you a lot of false flags. Here's why. The inflation rate right now is looking to actually be below the Fed funds rate. Now, in history, usually the Fed raises its Fed funds rate to just above core PCE, not CPI. Core PCE is really the main thing we're going to look at here. Core PCE is now below the Fed funds rate. Now, usually, as you can see, the Fed funds rate in previous cycles, they raise it above core PCE, and then when it's above there, they just pause. And so that's why the market is now saying, hey, look, core PCE is basically underneath the Fed funds rate. Why raise any further? In previous cycles, they haven't. So maybe the Fed are going to pause, maybe another 25 basis points, but the market is pricing in the turn already. The market is not going to wait for that. And so the pause is pretty much getting priced in right now. What happens after a pause? Obviously, you just wait for the data to come out. The banking crisis is going to, crunch credit creation, which means even worse economic data, which eventually means the pause and then the flip. It happens every single time, and this is the macro cycle we can take advantage of with BTC as well. So whether the Fed raise another 25 basis points, the market thinks they're completely done. CPI is possibly going to throw a spanner in the works tomorrow when it comes out. However, we can see that the trend is definitely down, and credit creation is very, very slow right now, as you can see by this data. As you can see, just the largest decline in bank lending on record. This is major, and we have to take away what the Fed is doing and the backward-looking data on how that affects things, because what we're going to find over the next few months is, as the data comes out, credit creation has fallen off a cliff, which has a major impact on GDP and a major impact on inflation to the downside. And so I just think the narrative is going to massively change over the next few months, where it has always been the Fed is in the market, don't fight the Fed, they're raising rates. It's going to be the economy's falling apart, the Fed needs to step in and stimulate and bring liquidity into the market, which is the exact situation that Bitcoin is made for. And here it is in the data. And that's why Bitcoin is trading up right now. As for the Bitcoin cycle, I know many traders are saying take profits around here. I get that. If you were trading in at 15, 20,000 for short term, then it's a great short term profit. In terms of the longer term cycles, which is what I look at, yeah, we are near the top end of what I would say the conservative price estimates were before this cycle. If you're in the crypto investor course groups, link in description to the crypto investor course private groups there, I posted this way before this cycle, pretty much at the bottom at 15K, was posting these the accumulation zone, which is the yellow, and then the bull market top zone, which is green. Just looking at previous cycles, we can see we're trading exactly along the lines of previous cycles, which is bear market brings us down to the 2 standard deviation zone, brings us up into the accumulation zone, which is right here. We're at the top of that right now. So, maybe there's another 5-10K in it for this year. Maybe the recession brings us a little bit lower. But Bitcoin is actually performing very, very well in comparison to its previous cycles. So we're right on track as for the long-term Bitcoin cycles as well. On-chain data is also showing exactly the same thing over and over again, which is bear market bottom leading into accumulation zone before next bull market. That coincides with the macro cycle. The top in rates, which the market knows is a pause before a cut, and then more stimulus. That's what they've done since 2008, the Fed has, and that's what they've done again this time around with the BTFP. Step in, make sure collateral doesn't fall, pump up their own collateral, which is US bonds. The price of those has been rising recently, yields down. So same cycle over and over again. So what we can see here, this is Willy Woo on Twitter. As you can see, bear market, the Bitcoin macro index showing that bear market bottom right here during Lunar and FTX and everything. And then obviously coming out of that, still in the bottom zone, right? So for me, still accumulation zone. We're nowhere near what I would consider a bull market top, which is the only time to consider letting go of Bitcoin, in my opinion, but nowhere near that right now. But coming out from that bottom, as you can see, we can see another piece of data here, cost basis. As you can see, when short-term holders, recent buyers, got in cheaper than long-term holders, we are now moving out of this regime. So again, these cost basis, as you can see, just marks the bear market bottom each time. We're moving out of it again. Now, why I'm confident that Bitcoin will keep moving up is just very, very simply this data right here, which is Bitcoin active addresses. So a lot of people like to speculate on the price, good for them. But I think the orange line is the thing, the orange line is the signal, right? Price is noise, orange is signal. This shows Bitcoin as a network is just attracting more human beings to it every single day. Up and to the right, you get bull market tops, bear market lows, higher lows all of the time, more humans adding value to this network and storing value in it, which over time does add value to a network whose sole goal is to store value. So this is really the signal which I'm looking at, and you can see we are nowhere near a bull market or a bull market top here. MVRV down at the bottom as well, still accumulation zone for me, but it's looking way more positive. So yeah, definitely still in accumulation zone for this period in the market. It's really next year after the halving and when rates are low and you've got the recession out of the way, that's a proper bull market. For right now, we're still in accumulation zone and we could still have a lot of volatility to the downside as well. If you're a trader, check the deposit bonus to Bybit down in the description. I'm James, this is Money's EG. Cheers for watching, and I'll see you in the next one.